All right, good evening, guys. Ken at Tortoise Capital, the nightly strategy podcast for April 7th, 2020. So I just want to start with the closure report. We're still trying to get that uploaded. So I'm going to cover just some of the highlights. That has a pretty good speed run in it. So today featured a large gap up and then pretty much sold off the rest of the day and closed poorly right at yesterday's close. And so all of the joy from the gap up and enthusiasm disappeared by the end of the day. So in my mind, what that creates is kind of like a 2-day critical zone, because now we got a Monday and a Tuesday that has gone from 258 to 275, so a 20-point range, and it is pulled back right in the middle of it, and then the last leg of that was down. So it's in the middle, but in a negative way. So that doesn't fill me with a lot of confidence. I mean, I never have confidence about the direction anyway, but that's really the concern. So the 1-day range, you see here, the 10-day range, the 10-day high is at 275.5, which was also today's high. The 30-day range highs up here, the 1-day low, the 10-day low, and the 30-day low. The dragon's belly I consider to be very strong support, important support. And then the belly of the RL10, if you will, the 2-day low seems to me to be significant. That's like Monday's opening. Monday was a big gap up. So if on Wednesday we get a reversal of fortunes and it goes below Monday's opening, we always track the Monday opening as a key price level for the whole week, being optimistic or pessimistic for the week. So it kind of sets the tone. And that coincides with the 2-day low. So I really am looking at 258 as being significant. Breakouts to the upside, though, if it gets above 275, I mean, there is no real resistance. I mean, you got to go back 20 days to see any kind of resistance level. And that you really don't even get that till you get back to fair value at 306. So this $30 between 275 and 305 is open field running. I mean, it can really go. The previous $30 from 245 upward has been heavy sledding. So if it can get above 275, that's an important breakthrough. So we'll see tomorrow what the intentions are. We're about 7 days into a PSAR flip. So this already feels like a pretty good swing trade. You will notice when we get to the speed run that most of the swing trades that I started yesterday or carried over from Friday, I cashed today as part of this big sell-off. There were a bunch of things that started off really well, and then everything just turned south. And I said, you know what? We're in bearish, volatile conditions. I've got a 2-day good move in hand. I've got a move from like 255 to 275. That's a 10% move in 2 days. I'm not going to let that escape. So most of the things that I had started off as swing trades ended up getting cut intraday. There was only a couple things that I kept. And so that was the nature of today's price action. So we're still in the, in terms of MACD histogram and 4 seasons, we are still in the spring. We have just come through the Red River, and now we're coming to the all-important test of the zero line. So if you remember yesterday's chat, the winter, spring, winter is an instant short, meaning if it comes up to the summer and then rejects and it resumes, then the spring will have looked like a dead cat bounce. And then the primary trend of the winter continues. But if it can test this zero line and get into the summer, then we have a chance for that third line or that third leg up, which would be the move from here about 260 to to 300. So that's the critical state that we're in. This is now more of an operational move than it is a daily tactical move. People are trying to determine if this was enough, if these 12 days here were enough to establish a bottom down here at 220, that they can now start safely putting stuff in. Right. So that's my view of that. Inside the the sectors, let's raise this up a little bit here. So we have the S&P finished the day at only 0.2 or 0.12, the Dow at 0.07, U Dow at only 0.2, Russell slightly better, precious metals slightly better, emerging markets 0.3 better, real estate, financials, Japan, Mexico, energy, materials, Brazil, as we work up the stack. Even, my nemesis here, Simon Property Group, was up 12%. And then the inverse oil, which we'll see on a tactical trade, was up 13%. On the downside, as we start working our way down, McDonald, these are all the things that underperform the S&P today, getting worse as we go. McDonald's, healthcare and tech, treasuries, some energy sector, Walmart and Boeing, and then oil got smashed. We had a couple things kick into the summer that are worth noting. So Caterpillar became a daily summer, so that means he's a early leader in crossing that zero line. Wheaton Precious Metals on the defensive side, and then Cisco and Walmart both came in as daily summers, those two green dots there. So those are the ones that are relatively better in terms of their own price action for like relative strength leaders. So that's not surprising. Walmart, Cisco, Gold, and Caterpillar. 3 out of those 4 are the the rebuild America narrative that I've been talking about. So that seems to me to be pretty interesting. I want to shift to the daily report and hit that quick. We've already seen this. So we have still bearish volatile. We have 12% below the 200-day moving average. The risk index is positive 0.23, so that's actually pretty interesting. Oops, sorry, where's my little? Yeah. So this risk index at 0.23 is pretty interesting. Now we've actually got that little green shoot. So this last 12 or 15 days, that risk Z has been telling us consistently that things are getting better and better, even though it didn't necessarily feel like it. That was a pretty good advisor. And now when it's right here at the zero line, I want you to notice the last 3 times it was there, it had no follow through. Here, and here, it had no follow through. So this is really a critical state after, we've looked into the abyss, we've come back a step or two, but now it's a question of, are we going to find our way out of this, or are we still in quicksand? We don't know. So the risk Z is a pretty good advisor on that one. No signals in the channeling overreaction. You notice the 10-day max pains remain pretty much the same guys. Boeing, American Express, Walgreens, JP Morgan, Ford, because they got smashed so hard. In the tactical summary, no real signals because of the sideways choppy nature of things. A few dojis. Walgreens, Goldman, Travelers. Um, Big winners today: American Express, Dow, Goldman, Walmart, Pfizer, Procter, and Boeing. Big losers today. Not much to choose from there. This is still a market's choice. This is getting the market right is the key on this one. For the ETF summary, again, nothing tests out on the auto framer, and part of that is today was a relatively wide range, so that means the range risk is large, and we're very close to the 10-day high. So there's no wiggle room in there for that mechanical swing trading one day at a time on a test of the 10-day high. Remember, that uses the auto framer uses the 10-day high as a reasonable proxy for upside gains. Now, my spider sense is that a breakout of that 10-day high, and we're going to see the relative strength winners win. So what I would say on that is, if we get any kind of upward motion tomorrow, the first ones out the gate, the things that have the early momentum, are likely to be the things that will lead the way north over that next $30 in the market. So I'll be watching for the new market leaders tomorrow to see who's going to emerge from the pack. Or if it's a failure, I'm looking to see who are the market laggards, who are pulling this thing to the south. Is it energy and Boeing and real estate and that kind of stuff? So we'll see what that looks like. So there were no, I can't remember the last time this was the case, but no symbols tested out in the auto framer. On the regression line fractal framework, top shelf, these are the ones that have the greatest distance between the RL10 and the RL270, as expressed by the reward to risk ratio, and that's we're using the ATR as the measure here. So Boeing is still 6.5 ATRs below his long-term fair value. Disney almost 4. Brazil and Latin America, or Brazil and Mexico, excuse me, 7.5. Latin America 7.5 ATRs below. They're really the stepchild of this thing. As strength has been oscillating back and forth between Europe, Japan, and the U.S., nobody has much love for the Latin American sector. So those are really deeply discounted. In the ETFs, the relative strength leaders, these are the ones that are the highest above their long-term fair value. So this is like the real defensive plays, like treasuries and gold. And then Walmart, Johnson and Johnson, Cisco, and Intel. Those were, 3 of those 5 were things that we had identified as infrastructure leaders. So it doesn't surprise me that they're doing pretty well. And they're just basically at fair value right now. So when you see minus 0.45 and 0.37, they're just very close to their fair value. On the daily squeezes, these are the ones that have had a relatively large average range in the last 14 days, but have compressed on today's range pretty tightly. So if you get an orderly open and then a breakout, and if it just goes in average range, then you're going to get these kinds of multiples. So this means treasuries have been very tightly compressed, as is gold, JP Morgan, Travelers stand out. There were a few symbols that we already saw that have moved into the daily summers: Cisco, Walmart, Wheaton, and Caterpillar. So those are of interest. And you see most everything's still in the spring. So when everything's in the spring, I like looking at the ones that were strongest spring. So when you see Japan, EWJ is in the spring, but 1.97. What that means, it is well out of its red river on the MACD histogram, right? Whereas if we were to see SPY is at 1.3. So here's how you interpret that. Let me go find that chart. if I can. Hopefully this will show for me. Or is it going to screw with me again? It just pisses me off. Sorry. So what I want you to know is that S&P is at the upper limit of its red river, but Japan is already well out of its red river. That's how you read that. That's how you read that chart. All right. So when you see these Z scores, that tells you where inside their red river they are. Okay. Damn this thing. It seems like the only time I have trouble with that is when I'm also recording. So I'm wondering if there's some disruption there between those two pieces of software. Well, and that's why when I do the speed runs, well, actually, when I record the speed run, it doesn't give me an intercept. But when I try to go to webinar and TC2000, I'm getting some disruptions. So that's why I've gone to recording the speed run and posting it early. All right. In the NDX, so in the 3 and the 10-day look back, let's take a look at some of the things that were interesting today. So it starts off with, over on the left-hand side in my cursor over here, Walgreens, American Express, and Disney all were in the green on there. So they had a 3-day range breakout, even though they've been very weak, among the weakest ones on the 10-day look back. So that's an early rebound off the bottom. Whereas Verizon, Caterpillar, and 3M all had 3-day breakouts, but they've been very, very strong and made new 10-day highs as well. So that's really where you see kind of relative strength happening. But meanwhile, Procter and Gamble had a breakdown of the 3 days, so that's going the wrong direction. So Procter and Gamble would be a symbol that I would be looking for additional weakness. In the same, by the same token, over on the ETF side, you got oil and treasuries both had 3-day breakdowns, and oil especially been very weak. So I'm looking for more weakness in oil. On the other hand, oil exploration and S&P materials, they have been long-term very weak, but the 3 and the 10-day have actually turned around pretty well. So I like looking again for the extremes. In the market mosaic part 1, still the parabolic regression line has crossed over the 10 or the straight 30. That's good. Today was a pause. It's at a critical state, but not deadly yet. The upward improvement in the slope of the regression line is still improving. It's now only about 1.5 standard deviations below long-term average, so it's actually starting to improve as we're trading off some of the big meltdown for this grinding upward movement. We've clawed our way halfway back to the 200-day moving average from the peak of the sell-off, or the trough of the sell-off, I should say. You can see how much volatility is really declining. That's the beauty of that risk Z. It gives us a mathematical day-by-day interpretation of that relative volatility. It gives us an actual measure. It's like you can't sense what your blood pressure is. That's why you need a gauge. The risk Z is our gauge when it comes to that kind of blood pressure for the market, if I can say it that way. In the 3 regression line slopes, the 90 is finally starting to roll over at 6 sigma, and the 30 has already come back to 5 sigma, and the 10 has already put in one good run, and now is pulled back to the normal river. So this would be the normal pause that refreshes. That's the second leg up. It was half the size of the first leg. Now the question is it going to go all the way to the far side of the river, or does it come back and test? That's where the pessimistic money is, the realistic money, if you will. Okay. So that's that. I want to shift now to the. I'm going to get that speed run uploaded for you, and I'm not going to try to do that right now. But what I do want to do is go through the daily charts. I'm going to save SCO for the last one because that one's pretty amazing. So let's start with Alcoa, or no, let me find U.S. Steel because that's been the consistent one. Well, we're just going to keep doing U.S. Steel for the foreseeable future. All right, so U.S. Steel had a nice gap up. Let me get my cursor going here. We'll use, or maybe we'll use yellow today. Yeah. So U.S. Steel had a nice gap up. The RL10 peaked pretty early. It couldn't hold the VWAP and sold off for about the RL10 established. And so the RL10 has now reversed. So I draw a line across at the belly of the RL10 and I stretch it up to the dragon. So that's what that yellow highlighted area looks like. When the RL10 crosses the dragon, I just get long. And the reason for that, the whole market was up. XLB was stronger than the market. U.S. Steel was stronger than XLB. It was one of the two strongest in the material sector. So since I already have a swing trade in it, I'm long there with the stop down here at let's see, whoops. I cut off the turn. Yeah, that's about 8 cents. Crosses the VWAP, feeling good. There's a PSAR flip, feeling really good. RL10 peaks and then keeps going. Never even comes to test the RL or the VWAP, excuse me. And now it has taken out the. One of these days, I'm gonna learn to draw these ahead of time. It has taken out the peak of the RL10 and that previous PSAR peak. So when it does that, I just take my second position. Standard practice. Stabilize it, takes off again, rolls over twice, peaks. I cash it at the edge of the dragon. I like getting paid early in the morning, so now we're about 40 minutes in, and we got a pretty nice trade on here. So this first, if we take this as the execution R, that's about 1, 2, 3, 4 execution R on the first position, and maybe 1 on the second one. So maybe 5 execution Rs on that first leg up. Feels good. Now, right in here, uh, tempted under a lot of circumstances, I would be tempted to just go ahead and stop and reverse. But the VWAP is very close. The market is still strong. Materials and U.S. Steel are still very strong. So I am interested in seeing if it's going to hold at the VWAP. And I've got a long swing position on this one. So I don't take that trade. And then I regret it because it comes all the way back down, all the way down here to where I was. So if I like this for 5R, then there was a swing in here. There was a short side trade all the way back to the start of probably 3 execution R's. Somewhere in there, there was probably, 3 more in there. But, can't get them all. So the RL10 peaks. Now what I like is that we've got a low. Let me draw that as a red line. We have a low and a higher low in the RL10. So I always treat that as a good thing. I like that. And I would say I should be drawing this line from the dragon all the way across. And the peak of the RL10. And probably the peak of the VWAP already, right? Those are significant upside confirmation levels, if you will. Still committed to the long side. Now we get, it found support down here at the fair value. It found support here where it found support before. And I buy the RLXD. Again, I have a long side bias on US Steel. So now I'm looking to see, can it get to the VWAP and cross this VWAP? If so, that'll be a good thing. It does, and then rejects. Now I got my finger on the trigger. I don't want it to come below my entry price, so I got some kind of like a trigger right in here. I don't want to lose money. And you can see that the rising RL270, everything is kind of coming together to meet right here. And I take the PSAR flip exit, so a fraction. It sells off. Again, kicking myself that I don't have this, but my long side bias precludes me. So I got to have time, will, pattern, and money. I didn't have the will. In my view, I was certain that this was going to hold, and I was ready to play it this way. Alcoa was working really well right here. The market was stabilizing, and I just I couldn't summon the will to have gotten short, so I just wait. Now it bottoms out. So the size of this leg from here to here is about the size of this leg from here to here, which is about the size of this leg from here to here and here to here. So that's 2 legs up, 2 legs down, 1 leg up, 1 big leg down. And now I'm playing the RLXD with the stop here at the belly of the dragon. It crosses the Bollinger Band mean. It crosses the VWAP. It feels good. So I'm not going to lose any money on this trade. At this point, my stop has got to be, I would move it up to about here now, probably just underneath the, underneath that RL270 thing right about now. So I see that a couple have already gone through. So if it's a third test of that line, then I would be out. That's about where I feel it needs to be. Well, I held on. I was able to hold on. Must have been the market. But Ken, why didn't you get out? I don't know. I didn't get out. I didn't have the will to get out, or I had a belief in it. I was thinking the Bollinger Band mean. Don't know. If you get out here, then I got to get back in here. If you get out there, I'm not offended. And then my reentry would have to be even a little bit better, even a little bit lower. But my second entry was here, and that's, sorry. That second entry there is really when it takes out the hump of the dragon, and it takes out these 2 RL10 bumps right there. So that's a pretty good entry. So remember, we drew this from the RL270 or the VWAP before. One good sign, 2 good signs. So this was good. The fact that it got through was good. The fact that it held, and then what was once resistance is now support. It takes off a second one. Now what I'm trying to do is I've got 2 in hand. Now if it breaks through these 2, I'm going to be happy and sad. And so that's kind of the morning trade into the lunch in US Steel. Now, we're going to see the other morning trades. But the reason I fight pretty hard on these exits is that this is that morning trade that we just saw in US Steel. And there's probably 10 execution R that we just harvested. And it went from, sorry, it gapped up, ran down, ran up, pulled back. And so it had really 1, 2, 3 pretty good legs. And then the second half of the day gave all of it back. So if you have a belief in the long side, I mean, I have a belief in the long side about US Steel, but if I let my longer term optimism, my swing trade optimism rule, then whatever gains I've made through here, if I'm still holding on to it, I give it all back here. So you got to be able to operate in both of those time frames in an integrated way. You got to synthesize those feelings. So I would just say here's where the VWAP pretty much stayed the whole day around 668. And then the upper limit really was about 683. And then the lower limit down here around 647. So about 40 cents worth of travel time, which is let's see, 60%. That's about an 8% volatility. It's only 40 cents. Yeah, but it's 8% of the price. So that makes it an interesting trade candidate. Okay. All right, Alcoa. Also has a big strong gap up, sells off and holds. Makes a lower low in the RL10, crosses the VWAP long with the stop down here, and that's about 10 cents. Yeah, when you look at that price action in there, that's about 10 cents from 705 to 715. Second position, when it clears the RL10, I'm not going to draw all these lines from now. You've seen that happen before. Exited about the same time that the US Steel exited. Now, the US Steel thing failed right away. Alcoa started again, so I tried it, and then it failed. And then this one, I had the courage to go short, and that's one of the reasons I didn't take the short in US Steel was because I already had this thing going, because I had more emotions in it, because I thought it was going to work, and then it didn't. So I was already fired up about it. So short one crosses the VWAP and then recovers. So cash. Sideways mucking around. Notice how the Z3 lines are pinching, and now it falls out of that. So short through that yellow zone. Could have had a second position in here somewhere. I mean, I could argue probably here. I wouldn't be offended. But that's a pretty good exit on one leg. One of the advantages of not being in such a hurry to get that second position in is you get a little more breathing room. And the PSAR was strong as a stop all the way down. That's pretty good. It breaks out sharply and so I end up re-entering right where I re-entered before. Only that time I was just crossing the VWAP. This one, the VWAP is still 10 cents away. So all this price action up in here has pulled the VWAP 10 cents higher. So we're one long. Crosses the VWAP a second time. I don't like the fact I did not get out of that. Uh, I I accepted too much risk on this one. My only consolation is this thing was pushing the Z3 higher, and the Bollinger Band mean held, but I was not very satisfied. I am not offended if you get out here or all anywhere in this region here is a better play. I think I stayed in there too long, so I don't like my behavior on that one. Uh, if you do get out of here, then you got to re-enter there. And so I put a third position on, having failed to learn my lesson. I went ahead and put a third position back on and counted myself lucky on the PSAR flip. So that was luck. That was not well played. But at that time, in my defense, Alcoa was the second best thing in the whole stack. And then shortly thereafter, there is a sale over here as part of that big market rollover. The same rollover you saw in U.S. Steel happened right there too. So I give myself about a B minus on that trade sequence. UDow, big gap up, sells off short, crosses. Uh, Touches the PSAR, then reverses back up. So I take a fractional win there, just pay for the commission. Long one when it crosses the dragon, crosses the VWAP, that's good. Starting to peak and slow to get out. Kept a fraction. But by this time, that Alcoa and U.S. Steel were doing well, so I stuck around. Then I'm slow to get in on the short side. If I exit here and then get short where the VWAP crosses, then I get to enjoy this instead of watch this. But that's really a span of control issue because I had the Alcoa trade. Uh, a nice journeyman's win right there. Re-entered short, scratched. Owl entry long, scratched. Uh, this is a pocket entry short, so you got this elbow right in here, this big rollover. So that's long or a short one. Now makes a lower high and starts failing again. So that feels like a continuation pattern coming this way. And you can see that the VWAP is just getting steadily worse on volume. And we're a couple hours into the day. So short there. Just make my little daily pay. Higher low, and then the second leg up in the pocket. That's a continuation. So long one as it crosses the Bollinger Band mean. Now my target is I'd like to see it get back to the VWAP, and it starts off really well. Trying hard, and then failed. So exit at the Bollinger Band mean to get paid. Re-enter immediately because I got out too soon, obviously. Second entry, crossing the VWAP, cash because it failed. Now it's feeling kind of like a pretty choppy day. Try long again on the RLXD. Nothing. Fractional. The rest of the day was down. Now, right about that time, let's see. Oh, Caterpillar is now coming along. Hooray for Caterpillar. Let's see what Caterpillar does. There's a peak and a belly in the RL10. It rolls over at the same price level that it rolled over here, so it couldn't make new highs, and it's starting to be a Z3 pinch and a breakdown. This is at the same time when the Alcoa and Steel and the and UDOW were all starting to suffer. Caterpillar never really put in those big moves to the upside. So this felt a little easier to get short. Cash a nice leg down. Takes out the Z3 or it takes out the RL10 hump and then front running the VWAP. So long one, two, three, and cash. Feels pretty good. Caterpillar was a late bloomer. Re-entered long inside that little pocket. So it had this nice run up, pulls back, exit, and then crosses almost immediately within 5 minutes with support at the Bollinger Band main. So I just get back in. I mean, I have to get back in anyway if it takes out the hump of the RL10. So I just get back in that little pocket and scratch and try it again. Now, this time I said, I'm putting 3 on. So on the first leg up, which was a nice win, I had 1, 2, and then 3 in cash. And I tried it. It tried one bump up and kicked me out and then immediately reversed. I put 3 positions on this one. You don't see me do that very often. But I did at that moment. I put all 3 back on, added a 4th one when it broke out to a new high of the day and cleared this Z3 breakout. So now I got 4 positions long, 5, and it's expanding on a pinch. And shortly thereafter, there's an exit right in this area. So that's Caterpillar. Now, let's see. Last one. This is the triple inverse oil. Sideways mucking along, and now it crosses finally after an hour and a half into the day. You have a Z3 pinch and then a breakout above the VWAP. So I just get long there with a stop down here by the Z, like the Z2, Z3 line. So that's about a 50-cent risk. So long at 22 with a 25-cent risk. Scratch. Re-enter on the little higher high. Fractional. Now it comes into this little Z3 pinch, really tight Z3 pinch at lunchtime. And then I just draw this line across from the blue. This blue line across, that's like a Z3 excursion. So I buy that one. Pulls back a little bit, flattens out. It breaks out above the next Z3 hump. So now I get 3 positions in. The RL10 makes a peak right here. So I draw a line across there. 4th position in. Now it's feeling special. It's a rocket ship. The next little hump breaks out. 5th position in. 6th position in with a stop at 26 and some change. And that gets hit about 20 minutes later. It goes up a little further and comes back. So on a 25-cent risk, the first position goes from 22 to 26. So that is 16 execution R on the first one. This one goes from 22.75 to 20. So if this one is 15, I'll let you do the math on the rest of that. That is the power of a Z3 pinch, a super pinch. Yeah. Yeah. Execution are exactly like all the other trades, all of the same architecture, all of the same engineering, all the same geometry, all the same measured reward to risk. Uh, but that's oil. That's the triple inverse of oil. So RJ at the Tharp Institute asked me if I would write some marketing copy for people to encourage them to take the June workshop, and I almost don't know how to answer them because I've told them all they got to do is come to these nightly podcasts. So there you are. The rest of the speed run is interesting. It should be uploaded here shortly, but that's that whole set of 5 trades. You should just study your ass off on those. Pardon my language. That's improper, but anyway, I would study those trades. So that's what I wanted to cover tonight, pending your questions. Time well patterned money. We're about 50 minutes into it, so that feels like enough. Okay. Thanks for your patience. Sometimes that, the cut and thrust and the left foot, then the right foot and all that feels, but every once in a while, something uh, unexpected happens. And it wasn't because I was smart. It's just because I followed the rules and it decided to keep going. So I just decided to tag along. So that's what 50R looks like. A lot of hard work in there and prep, but there it is. And tomorrow's another day. So study your notes, get prepared, plan, prepare, execute, assess. Detect, decide, deliver, assess. Lather, rinse, repeat. All right. Take good care, guys. I will see you in the chat room tomorrow. I could get used to this working at home stuff. Take good care, guys.